Hey, good morning. It's Wednesday, February 6th, 2019. This is your daily Forex trading strategy session on the Forex.Today YouTube channel. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, hey, good morning. Nice to see you. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. And if you're new to our family, please visit TradersWay.com and open a demo account today. That's step one. So when you log into the back office, you can download MT4, which gives you the ability to maybe try your first ECN account, or maybe try the variable spread account or a fixed spread, whatever you choose. The second step is then, under the video here, you can download my MT4 chart templates and install them into your MT4 chart platform, which you just downloaded from Traders Way. So now you have all the tools you need, the same tools that I use every single day. And step three, blood, sweat, and tears for years until you master all the skills required to become a successful foreign exchange trader. And I share those skills with you every single day here at Forex.Today. So good morning. Did you guys watch the State of the Union address? Yeah, I thought it was pretty good. So listening to the reports by media this morning, there's no mention that the fact that the whole house sang happy birthday. There's no mention that women stood up and cheered when people were reminded that this is the how do you say it, the most female representatives in the House ever in history, and more women in the workforce in history. Oh, that's my YouTube freaking out telling me the webinar started. So anyways, so even though that there was like one side that was clearly Republican and the other side was obviously Democrat, there were a couple of times when everyone stood up and cheered USA, USA, and all that kind of stuff. No mention of it, though, by the media. Pretty amazing. But I thought it was pretty good. He did what he said he was going to do. There's no surprise there. All right. Now, the interesting thing besides that, I think, was this British pound. Yesterday, the British pound fell off the face of the earth, hit our pivot point, and did a complete reversal. Amazing, huh? So just looking at, like, here's the first one. Amazing, right? So we had drawn this, looks like maybe 2 weeks ago, right? How do you trade oh, let me get my drawing tool. It's one of these things where I say, look, if you're a bear and you're in a bullish market, usually you can afford to wait. Waiting for my drawing tool, hang on. Okay, so here we go. All right, so it took a long time, granted, but you know, you're not going to get a trade every single day. But there was a time when we realized that this was going up and up and up. And you know, one of the questions we asked a week or two ago is, you know, what if you're a bull in a bearish market, or what if you're a bear in a bullish market? When do you, how do you trade? And I did a big discussion about, just selling a first touch is not the way to do it. Okay, but look at this. I think we can agree that that went through support, and that definitely puts pressure on bulls. And the way that you trade basically a breakout is a roll reversal. Okay. Okay. So now check this out. How do you follow this up? Okay. If you're a bear, this is your a great opportunity for another sell. Okay. Standard operating procedure. I don't know what you prefer to use. Maybe you prefer. I like drawing things like this. Keep in mind, if you're using moving averages, you sell at the 21. If you're using Fibonacci, somewhere between the 382 and 618, which happens to be just slightly, well, let's do it this area. Okay. So depending on your methodology, Fibonacci says here, roll reversal says here, moving averages say here. So if you're a bear, okay, that's the methodology you're looking for. Now, what if it reverses here? What if bulls were the ones in this? Now, we know bulls are not the first ones in it, but whatever. What if it does reverse? What would it look like? Well, it'd probably go a little bit higher to the 55. You'd probably come back down to the roll reversal, which we've already marked, and you get yourself a head and shoulders inverse, that is. Okay. So what's your thought? It's pretty easy if you're a bear, and it's pretty easy if you're a bull. If you're a bear, this is your sell area. Very, very straightforward. And if you're a bull, this is probably like your buy area. Probably just a little bit lower than what we have marked. Probably more like that. Okay. And like after a 5A cross, what it does is it comes back to the 8 and then takes off. Let's see if it did it here. Yeah, see? Fresh 5A cross, breakout, back to the 8, down. But anyways, it seems to me it could be either way, but then you're looking at the 21.55. When you're below the 21, you're bearish and aggressive. When you're up here, you're bearish and conservative. Meaning aggressive meaning this is your target and that's where you're going. If you were higher, you would think probably double bottom. Okay, you would still have pips from here all the way down, but you're not thinking lower low. There's the difference, okay? For swing trading, when is the best time to spot your entries in an analysis? How about during the swing trading group meetings? There's sort of the first challenge of that. So another crazy day, like yesterday when I was watching the pound, it was just crashing. And then whoop, there it is. Did you see, was it Tusk that said publicly that there must be a special place in hell for those who voted for Brexit with absolutely no shred of a plan on how to carry it out? That's pretty funny. So apparently the Europeans are a little frustrated with the British. So like pivot wise, there's nothing going on here, right? So this is not a technical move. Yeah, that'd be right, Brooke. Daily and 4 hour, 15. But that's what we've been talking about for how many years, right? I typically don't watch the daily. I mean, you can, but usually it's not far off from what the 4 hour is doing. Pound Swissy. Look at that, huh? Much more stable. Well, the Aussie's weak at the moment, so you get an exaggeration. The Swissy's quite stable, right? So, oops. Just trying to get rid of this. There we go. I won't do that. Yeah, exactly. Has it broke? Yeah, well, I would imagine so. So I don't know what you did before, but I don't know any other way. Right, Brooke? So it's interesting. Well, good. Yeah. Makes sense now, though, right, Brooke? So the weird thing, like for someone that's self-taught, like I wonder what people like, what other people do. Like, why would you not do that type of analysis, right? So I just bumbled into common sense. Oops. But yeah, there's no smoke and mirrors and weird math and all that kind of stuff. Anyways, we're just kind of moving along, following the channel, nice and steady. So pound got really weak yesterday, but then rallied on a lot of the other pairs, but didn't do much against the Swissy. Well, the Swiss franc's pretty stable. Okay, what kind of price action do we have here? Mayor says, is this buying consolidation in pound Swissy? Why would you buy consolidation? Let's go back. Why would you buy consolidation? That doesn't seem like a good opportunity. And then also, this is downward right now, right? Not upward. So how would you argue to buy this? Well, you would argue something like this, right? Is your buy zone. But still, you're not there. By the way, I guess I have to show, for some reason, your message was blocked. There you go. Yeah, so you basically have two choices depending on your time frame, depending on how bullish or bearish you are, depending on what's going on a 4 hour and 1 hour. I'll leave all that to you. I'm not going to confirm or deny your trade plan. But on this time frame, support is down here, so maybe you can argue for it if you have good evidence on a higher time frame like a 4 hour, right? Otherwise, you should let it break and catch a pullback. Okay? Because down here you're betting. Now it's going to make a higher high, higher low. Or you can wait and your entry would be in here. Okay? This is a guess. This is technical analysis. Hey, Zemo. Yeah, that's what that's for. You know, another balance brook that I used for many years was the 3-minute chart. It was just about the middle between the 1 minute and the 5 minute. So I used to scalp a lot on the 3-minute. Right on there. Yeah, we got to get luck and guessing out of people's trades, right? Okay, so now I go to a 4-hour and I ask you, what's your trade plan? See, I would understand a bear here. Double top, lower low, lower high, lower low, lower high, lower low, lower high, lower low, or lower high, lower low, lower high, lower. Maybe forever, right? And where are they going? Can we read their minds? Well, they sold here at the M3, so they're heading way down here. I can read their minds. So once again, I say, why do you want to buy a downward sloping channel off of a M3? Right? So on the smaller time frame, like that's for the month, on a smaller time frame, we have to believe this to this, right? Why? So let's go into a smaller time frame. Let's go into a 1 hour now and analyze it. What is the top of the week? Right there. Weekly M3. What is our trade plan? Okay. M3 to M1. So now you could say, this is where we would take profit. Okay. Which is another way of saying that's the first real opportunity for bulls to consider maybe buying it. Okay? Because that's just basic trading again, right? Very, 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 very basic. This is just swing trading 101. Right? Is anyone considering joining the swing trading group? Oh, thank you for subscribing. We have this mostly the same people that have been subscribers for 1.5 or 2 years. They keep resubscribing. And we have a few new people, but not a whole lot. Now, this last weekend was messed up because of non-farm payrolls and stuff. Yeah. But it's really making sure that you got your, your radar, set properly, your head screwed on straight when you're doing your plans. Yeah, you go to fxbootcamp.com. You watch 24 hours of videos, both day trading and swing trading, go through performance coaching, and you can join the swing trading group that meets on Fridays. Yes, there is. Noon on Fridays. Well, Alex, on a big sort of weird day like post anything unusual, like State of the Union address is not like a weekly jobs report or monthly CPI or even quarterly GDP. It's a one-off kind of event. So I tend to be very, very careful of taking what I normally do every day and then apply it to something that may not be an everyday. What time zone? The center of the universe, pal. New York. New York. You mean what time? New York time, Bubba. Bubba Swing Trader? Yeah, ET. Well, Shane says busy looking at the tons of hours of videos on the Trader's Way channel. Yeah, in the Forex.Today channel. But you know, those are recordings of this, right? You should go through formalized education training, right? Okay. Just a thought. All right. All right. So anyways, that's that. But thank you for asking questions like, for example, I would just never have thought that someone would be considered buying that. So it's good to know, like, oh, well, why might it be okay? Why might it be attractive? But then what are the other things you're missing? Right? So, and that was probably very helpful for a lot of different people. So again, thank you for participating, guys. I think everybody wins. So again, look at these crazy reversals. Yesterday, the pound was just sick. And then now today, pound is strong, but Aussie is sick and weak. So remember how yesterday I moved my stop to protect 100 pips on my Aussie yen long? I got knocked out. Aussie wimped out on me. So I was only in it for what, 8 days? Hang on. Excuse me. Okay, so what is it that you want to do with it? Well, remember, I have to start with the basis of the plan. Joel says that Lo was talking about the rate cut, right? Well, did they mention it? I mean, usually they'll tell you why. The slowing economy, housing, jobs, inflation. Yeah, that's right, Chris. Oh! Malcolm just joined the Swing Traders. What's up, Malcolm? Boom! Go through the video starting now. But even though you may be tempted to jump straight into the swing trading course, do the basics. Like, I don't know how well you know me and my trading style, but if it's sort of like, or if you're, let's say, really new to trading, I would do the whole basic trading program first. And that's like 8 videos. So that's about 8 hours, maybe 6 hours. I think they're more like 45 minutes each. And I think there's about 8. There could be 10 of them. I would do that. I'd also do the price action one. Those are just sort of the basics. Like, you should know price action. If you don't know price action, nothing's going to help you. I mean, you could bumble your way through swing trading, but you probably wouldn't. Your entries would be sloppy. So I would, like if I was teaching you how to golf and you're like, man, I've been golfing for 3 years. Good. Show me how you hold the club. Show me how you line up to hit a drive. Show me how you aim. That's what I do first. You're like, no, driving's not my problem. All right, good. Grab the club. Go stand. Aim for a target. Don't even swing. I don't even want to see your swing. I want to see how you stand, how you aim, and how you hold the club. That's where I would start. So in that case, I would say, do the basic training, do the price action first, then go into the swing trading, okay? And, of course, we meet on Friday, so you can get a good dent into the education before that. Chuck says, over the past year, the next move is up. The next move up scenarios. Okay. The next move up scenarios we're more likely than the next move is down scenarios. Today, the probabilities appear, yeah, okay, so he's saying they're neutral. So what he's saying there is no interest hikes coming, and that there's no need for an interest rate cut either. I'm Australian too, Malcolm. Aight. Get on you, mate. Ripper. That's a kangaroo, mate. Is that an emu? And a roo. Yeah, they call that a passport. Isn't it amazing? I think that passport's almost full. I think I need to move on to something like my 4th passport. Look, I'm 45, so that's old, but it's not that old to fill 3 full passports. How do you have that? You mean cash? How do you have yours? The Queen gave it to me. One of my favorite stories is I was trying to travel somewhere, and I realized, so I was packing my bags like a day in advance or 2 days in advance. And I'm like, oh, I'm going to need my passport. Need to make sure, I have it. And then I thought, oh, I hope I still have enough time, because you can't really travel on a passport with less than 6 months. So I open it up. I'm like, oh, shite. My passport expired. And I'm traveling in 2 days, right? I'm like, oh, crap. So I pick up the phone. I had been at a party at the, what's his name? The Consulate General's house in the San Francisco Bay Area. This was back when I was introducing entrepreneurs to venture capitalists and lawyers and stuff. And Australia was trying to do a tour of their successful entrepreneurs and bring them to the Silicon Valley. And so they invited me to the Governor General's house. And so I'm at a party, and I got to meet some of their venture capitalists that came with them. I got to meet some of their entrepreneurs and stuff like that. So I'm hanging out in the Consulate General's house for Australia, just having a good old party. And then, of course enough, 3 weeks later, my passport's expired, and I'm traveling. I'm like, oh my God, I need to renew this. So I contact the Consulate General, or the office, right? I'm like, yeah, I need to renew my passport. Like, good, okay, mail it in with all your paperwork, and it will promise to get back to you in 3 weeks if there are any mistakes. And, it should only take 6 weeks to get this back to you. So I'm like, no. I need this tomorrow. And you can hear the laughter like, hey, this idiot's calling. He wants his passport renewed like in less than 24 hours. They're like laughing. They're like, sure, buddy. Yeah, anything for you, right? The laugh, hang up. So I call the Consulate General for Australia. Steve Arama. Hey, what's up? Yeah, great party. Love your place. Hey, by the way, can I get a favor from you? Like, I'm traveling tomorrow and my Australian passport's expired. Can you get this done for me? Not a problem. Yeah, next morning, I got it done. They're just like, boom, you're in. Thank you. Off I went. That's one of those, it's who you know kind of people, and I felt really good. I felt really proud. Like, damn, I just did that. It was really cool. Like, damn, I just did that. I just made a phone call and got the impossible done. Yeah, that was cool. I love those scenarios. So yeah, so how did I get it? That's how I got it. Cash says, Wayne, are you an Australian resident citizen? Well, how many non-citizens travel on Australian passports? Are there a lot? You have to be a citizen to have a passport. Come on. Come on. All right, come on. Let's move on. Okay. Anti-trade opportunity for Kiwi. Well, here's one we discussed 3 days ago. So it shouldn't be a surprise to you. This is going to be a battle of wits, however. Okay, short-term bulls, or let's say even longer-term bulls, excuse me, are going to think something like this, right? This is how I marked it up for you like 3 days ago. Easy, right? That might be true, AMFX, but I think it's also sleeping with them that's the problem. All right. However, what if you're a bull? Or sorry, a bear. A bear's trying to get this done. And, well, it's working right now, but I don't think it's a good idea. Like, if I were me, I wouldn't do that because we haven't breached this yet, okay? This is the prevailing trend. This is the prevailing price action. I wouldn't go bearish on this. Like, you do have a good bearish price. And we knew this last week that this is where bulls sell and this is where bears sell. We know that. We talked about it. It's a done deal. And the thing I talked about, really, I guess it was Sunday during the Super Bowl. I said, well, this only gets you down to here. Bears want that, but so do bulls. So it's still not clear, even though it's fallen for what? This is day 3 now? 3 days in a row? Doesn't mean a dang thing on the long run. There will be bulls here. I just don't know how many. So I would still, if I were me, still be a bull. Why would I say that? Well, it's still bullish, technically, but also fundamentally my bias is bullish. Okay, fine, great. So how would I enter this conservatively as a bear? Well, not a one-touch, like selling where bulls are selling is short run. You're short-term short in a long-term long. So you'll make money. Don't get me wrong, you'll make money. You just won't make a lot of money. So as a bear, wouldn't you feel more confident in a double top? So if I were wanting to be a bear, I would skip scalp my way down, stay out of that nonsense, and then fire for effect here and take this down hard next week. Okay? Does that make sense? I'd be super cautious, super conservative. I'd be trading on a 15-minute chart or less. I'd pick up 50 pips, laugh, set up another trade, pick up 50 pips, laugh. But I'm not in it to win it. I'm just in it to make money, right? So often in the past, and I've done this more recently, so we can return to it. 1, there's income trading. Okay? And 2, there's wealth-based trading. Okay? So what's the difference? 1, you're not going to let it run. You're just in it for money. So you know you're selling here, and it's super high aggressive. The reward is going to be modest. But you know either way, it's likely to fall. So for example, bulls want to buy it down here. Bulls want it to fall. Bulls are selling up here because they're getting out of their trade, so they expect it to fall. And a bear could certainly sell into that. But you should know that the bulls are going to buy it back here. So, but it may fall 100 pips. So do you walk away from the 100 pips? No. So you might trade it short-term short, okay, for income. It's like your job. You're just picking up the money. You're like, oh, look, $100 bill. Boom, you pick it up. But you're not going to say, oh, there's going to be 100 more behind it, right? Under this $100 bill, there's another $100 bill. And under that $100 bill, there's another $100 bill. No. You're just like, oh, look, money on the ground. Put it in your pocket. Or, okay, call the police and report the $100 bills stolen. Right. and whatever. And then whatever. Okay. The next one is wealth-based. When you trade, it's wealth-based. So you're like, okay, I know it's going to fall 75 to 100 pips, but I'm going for 300 pips. I'm going for 500 pips. I'm going for 1,000 pips. And that's where in day 1 you make 50 pips, in day 2 you make 50 pips, in day 3 you lose 30 pips, in day 4 you make 50 pips, in day 5 you make 100 pips, day 6 you lose 30 pips. And you just kind of up, down, up, and it just keeps monkeying around slowly up. Okay, you're not in it for 25 or 30 pips. You're in it for 250 to 1,000. Okay? Okay, so short-term short versus long-term short. So if you're just in it for income, this is a short-term short. In this case, you're probably short for a day or two. You'll make 100 pips, and great, but don't expect anything more. A double top now, for you to make 25 pips on a double top like this is shameful. If you made 50 pips selling here next week and you made 50 pips, that's shameful, because it's probably going to drop 300 or 400 pips, and you're scalping. It just tells me you don't know what's happening. Okay. And how many people do you know that trade Forex that just do 25 pips here and 25 pips here, and then they lose money here, and then they try it again, 25 pips and another 25 pips, and then they lose 25 pips, then they break even on this one, and then they 25 pips here, and then 25 pips here. Every day they start over set, right? And you're completely income based, which means, like I've described before, you'll make a lot of money, but you're poor. Wealthy people don't work for money. They don't get, right? They don't even pay normal taxes, right? When you get a wage, you pay what? What does a person pay? 40% taxes because you earn a salary or an hourly wage, right? Wealthy people, they get distributions. Right? Because they own a business or they own an asset, right? And they get capital gains. Because the apartment building has gone up by 50% as they collected rent. I told you my son and I went through a really bad neighborhood recently. And I said, you know what the interesting thing is? How many of all the people you see on the street, the ones playing basketball in front of the liquor store, do they own their own homes? Do they own the apartments that they live in? Do they own this? And he's like, no, I don't think so. Like, yeah, I don't think so either. I think they're poor. But I said, the interesting thing, son, is somebody owns all those houses they live in. Somebody owns all the apartment buildings that they live in. And then I say, you know, whatever. So I said, just imagine now you're collecting $800 a month from every one of these apartments. And the apartment building was paid for 20 years ago, because a lot of the apartments are from like the 1960s. So 20 years ago, the loans from the banks have all been paid back. So all the money that comes in every month just simply goes into your pocket. I'm like, yeah, every once in a while you have to fix the apartments, but look at these apartments. Nobody's put money into these apartments in years. So they collect the rent goes in the pocket. Okay? The landlord doesn't earn a salary and doesn't pay 40% taxes. That's what a poor person pays. because they have a job. So if you work a couple hours and you make 50 pips, or you work for 4 or 5 hours, make 50 pips, and then you cash out, and you have nothing, all your trades are closed at the end of the day, and then tomorrow you got to come in and start over again, you earn income. You get paid by the hour. Okay, but hourly. Because when you stop trading, you stop earning money. So therefore, you're rich with cash because you make money. And maybe you're trading big lot sizes. So you're like, Wayne, I make $2,500 a day. Okay, good. You have lots of income and you are rich, which is to me a form of poverty. Right? How are you going to make money tomorrow? I'm going to start all over and wing it again tomorrow. Versus knowing that, right, the bigger trends here, okay? And then the smaller trends, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 and down, buy, right? And you get 5 trades in there, and this one's up for 200, and this one's up 150, right? And that, right? And you re-enter and all this kind of stuff. And where you get bigger money, you end up making bigger money. The difference between having lots of money and still being poor, because you're paid by the hour, and being wealthy is that while you're sleeping, your trades keep making you money. Your money makes you money. And a great way of this, I think I discussed it in the book, but I remember doing this for myself. I discovered a lot of paradoxes when I started doing the math behind trading. One of the things I discovered is the least amount of money I could possibly pay myself. So let's say this is year 2. And I have to decide at the end of 30 days, let's say I have this much money. Some of it may go to paying me, and some of it can go to saving in the account. Okay? And then another 30 days goes by. How much should I spend on, mortgage and such? How much should I pay myself? How much should I save? Right? Marginal propensity to save, marginal propensity to consume. So what percentage? Is it save 20%, pay myself 80? So if I paid myself a lot of money, if you do the math at the end of the year, I'm still poor. Now I have a lot of money, but if I have a bad month or a bad quarter, it screws up my entire year. I'm really in trouble. So I'm always stressed out, right? But if I reverse this, if I consume 20% of my profits and save 80% into my trading account, so I'm paying myself less, so consider it like less salary, but then I pay myself based on capital gains at the end of the year, I'll make probably 3x the amount of money, even though I'm paying myself less. I'm only consuming 20% a month that I'm saving, but I'm going to make 3 times more money because my assets under management have grown significantly. Okay? So I have to decide to pay myself less so that I make more money. Wealth. Compound your assets under management. Now you own something, like it's capital. But a capital could be a machine in a factory. Capital could be owning an apartment building. I suppose in a weird way, just owning a business is capital. But you're not getting paid by the hour. See what I mean? Chris, that's a dumb question. Come on. Come on. It's a little bit rude too, but come on. All right, I make enough. All right. Okay, let's go through WTI and gold. Okay, we're still stuck in here. It's still not really going up. Well, slightly going up, not really going down. Very, very, okay, very, very flat. So as this stays flat, you have to get worried about macro. Okay, or break it down. Is there too much supply or is there lacking demand? Why isn't it going up further? So remember, we were buyers at 44. Now we're at 54, and we're just sort of flapping around. It's not technically bearish, but it's not acting bullish either. Does compound interest? Well, what we're actually talking about is compound interest in the sense that if you pay yourself, the less you pay yourself every month because your money has to come out of your trading account. So now your assets under management go down, right? Okay, you see? So if instead you can leave that money in there, so let's say you're a great trader. Let's say you're a very, very good trader and you earn 5% a month. And you paid yourself 0 every month. At the end of the year, you'd make 100%. These are very rough numbers. But what if you paid yourself half of your income to yourself and half to your trading account? I bet you only make 40%, not 100% per year. Okay? You see? Now you could play it out and say, well, if I paid myself 2.5%, or let's say 50% of my profits, and that drops me from 100% return per year to 40%. What if you just paid yourself half of this? Now this gets weird. You end up having, right, half of this in the compound, you end up still making more money and having more assets under management. Yeah. Yeah, Chuck, I think that's in the opening chapter of my book. If not, it's the swing trading, the carry trading chapter. Remember, it's one of the worst books ever written, and it's just like every other Forex book ever written. Or it's two of the other comments, but I know it's not true, so it's amazing that people do this. I don't understand the life of a troll, but that's what they said in the Amazon reviews. Cool. So anyways, oil's not going there, and I'm a little worried about it, but I'm not freaking out. And then here's the sort of the decline that we talked about earlier. Bulls and bears wanted this to come down, so what happens now is actually interesting. If you're a bull, so let's go bull. Plan A is here. Plan B is here. Okay? Yeah, AMFX, I don't know if I know that one. Oh, Raymond, why were you doing swing trades on a Tuesday? Tuesday night, Wednesday morning. Why were you doing that? Seems very strange. By swings, you mean day trades, I suppose. A daily swing. Well, Einstein was very poor at math. Oh, I see, and they fell apart. Yeah, I got knocked out of my Aussie swing as well. I think I made 100 pips. So, don't cry for me, Argentina. Beast? Okay. Jeremy says beast. I can do that. And by the way, I think I'm still in my Kiwi. I always forget what's on this account. So move the stop. Load. Okay, beast. We have one for a beast. All right. Okay. Which way are you going? So I lined this up for you guys yesterday. Bulls would buy it here. Bears would sell it there. And I don't know now. Those two things have happened. I don't know who's going to win the battle, but bulls did buy it there. Bears did sell it there. You can see I got it all blued out and everything for you. Right? So this is all stuff we've already done. Bulls bought it here on Friday. Bears sold it here on Monday. And what happens now? I don't know. I don't know. Does a bull try here again? After that, seems a little dangerous. So I don't know. Okay. So everyone who's asking for pound yen, to me, it's sort of like a weird thing to ask for now. We have the trade plans already done. This one you should have bought. I mean, you're basically asking yourself here, you're probably getting knocked out of break even. Doesn't mean you're buying it. And then to sell it, well, that was Monday. I mean, it's Wednesday now, right? Like, what do you do here? Where's the resistance? Oh, you might say this. Nah, not really, right? No. So, yeah, it's sort of a strange question. Like, I wouldn't buy this, and like if you didn't sell it a day or two ago, I don't know. And do you add another trade here? If you were a bear here, do you add another sell here? And you're like, Wayne, well, look at the 21. Well, it's still supportive. Like, no, I wouldn't add a new one here. But, like if it continued down, I'd probably add one here if I was a bear, right? So like it's sort of weird to ask about it now, right? It's like you didn't have a trade plan 3 days ago. No, Benny. I didn't say put more money. I said take less money out and grow your account size. But Benny, you've brought this up before. I'm going to just politely ask you to just sort of decline the course of questioning. Like I understand and I agree with you. Okay? But that's not what I'm saying. I'm not giving bad advice, and you're like saying I'm selling my soul to give people bad advice that would purely benefit Traders Way. It's ridiculous. If you've known me for the last 15 years of doing webinars, it's really ridiculous. But I understand being sensitive about it, and I totally agree with you that you should. But give me the benefit of the doubt until you know me. Okay? But I find it distracting from the training and the education. But I think it's a healthy skepticism. But let's just park it in the parking lot And if I breach some sort of line, please feel free to bring it up then. And I will most likely apologize or re-explain myself. Okay? And I'm trying to do that as polite as possible, and no slight to it. But, okay. So that's the pound. So I'd say it's all sort of the wrong questions, unless you're like on a 5-minute chart or a 15-minute chart. But then once again, it just tells me you don't have an overall plan. You're just trading without a plan. You're all tactics and no strategy. And that's the big red flag to me. So Jeremy says, yeah, actually, what most brokers want is the opposite. Yeah, for me to get out here and give you rah-rah speeches. And, you know, let's go, let's trade, come on, everybody, boom, right? That kind of stuff. And I don't do that. So anyway, so the pound moved a lot of volatility. And I don't like that kind of trading where it's down 100 pips one day and up 100 pips the next day. That's difficult. Obviously, if I'm trying to be a macro trend trader, that lacks a trend and even macro cohesiveness, right? Oh, USD CAD's on the sell zone? Well, on a daily, it's extended. So on a daily basis, you know, when you're outside of the normal pivot area, I call that a moo trade, which tells me I for sure can't sell this if I'm day trading. The only thing I can consider is a continuation, okay? That's a moo trade. And this comes back, I told a story, I don't know, it was probably 13 years ago when I was teaching pivot points. Amazing, right? And 13 years ago, somebody said, well, how long do I keep buying if we've breached? Because remember, the day trade on this is M2 to M4, right? So that was a perfect day trade. And yesterday was almost a perfect day trade. And the day before made you money, but not quite perfect. But, you know, day after day after day, you're making money. Cool. Look at this. Anyways. So this is consistently making you money if you're day trading. Great. But what about the days you're way up here? You're way beyond M4. Well, I told this story. I said it had to do, you know, I forget even how I explained the story, but it came down to cows, right? And you keep buying until the cows come home. And then I asked somebody, when do the cows come home? And somebody said, well, at the end of the day. So I'm like, yeah, okay. So you keep buying in a scenario like that until the end of the day. And then maybe tomorrow we counter trend this down, but tomorrow ain't today, okay? That's just day trading. Don't apply that to weekly or monthly trading and stuff like that. It's just an observation that I make. So another way of explaining it is, you know, if this week we stayed within the range, and this week we stayed in the range, and this was about the range, and this one stayed in the range. Here's a week where we blew through the pivots. Can you imagine if someone started buying it here? They would have got slaughtered, right? So on this particular day, you keep selling all day, and then the next day you reset. And maybe you were buying this and it didn't work out. Okay, fine. So in this situation on a daily, if we're outside of this, don't say like, oh, because of 2 standard deviations, right? And we're up here, oh, there's a Bollinger Band, so I have to sell. All that is so misunderstood, blind teaching, the blind kind of stuff. In this case, whatever happened was so outside of what has been happening that it's probably fundamentally related and is going to break further. So don't get in the way. Right? Yes, that's another way of saying it. So apparently I say if it breaks through, the momentum is likely to continue. Well, yes, and the reason for it is whatever happened was unusual. So you don't usually break through here. You don't usually break through here. You don't usually break through here, right? Or these other lower areas. So something unusual, and not technically unusual, fundamentally unusual has happened. So you don't want to like sell into that. Well, something's changed. Not technically, but fundamentally. So you're better off either just taking profit and not participating, or scalping your way up for the rest of the day. All right? On whatever time frame makes you comfortable. So this only tells you we're outside the normal range on the dailies, but what about the bigger question of like, well, where are we going? And a bull on this, okay, is thinking this. Now, I pointed out last week, actually, no, again, it would have been Sunday during the Super Bowl, that this is also extremely likely if you're a trend trader. And you can see the confluence of this is where bulls are supposed to take profit for the week, but that's where bears are supposed to enter for the month. So that's a very interesting confluence if you're a bear. Okay? So a long-term bear is going to have two trade plans. One is basically where we are now, and that's going to kick off the 4-hour 21, which we're not looking at it now, but I guess we could. Why not? Okay. Well, we're already breached that. So anyways, let's go back to the 1 hour. And I got to click out. Hang on. Got to click out again. Boy. There we are. Okay, so your plan A for a bear is basically where we are now, right? So plan A, oops, that was supposed to be a pen. There we go. Plan A is roll this over. Plan B is up here. Okay. If you're a bull, so this is all bears. If you're a bull, well, here's the problem. If you're a bull, you're buying in a down market. So you have to recognize that you have a lot of risk. You're short-term long in a long-term short market. So you're taking on a lot more risk. You should anticipate profit taking by other bulls in here. You should anticipate getting out here. Okay? If not here, here. And that's the big question. So now you're like, well, Wayne, I bought it at an M2, a WM2. So my target is WM4. But you see how much, how well that sets up plan B? Okay? Sets plan B up very nice, doesn't it? Well, what I say in the book is twice the risk, half the reward. If that makes sense. Okay, let's do one more pair. And this would be a good opportunity to do a thumbs up on the video, guys. Would you do that for me? Pretty please? Wow. All right. Goodbye, Benny. I thought I was polite. Wow. Wow. Amazing. Yeah, no, I was really polite and I asked him to just like, unless I stepped a line, but he wants to keep going that way and I find it distracting. So it's too bad. Euro Swiss. All right, we'll do Euro Swiss for Raymond. And then we'll call it a day. Euro Swiss. Thank you, Brett. Thank you, Angel. Thank you, he, ha, ha. Or is it a? He, a. And Tech Pro, thank you guys for subscribing. Okay, all right. So let's clean up this mess a little bit. I don't see like, oh, that's wait, we wanted Euro Swissy. This is USD Swissy. Good, that looked really flat. Aussie, Kiwi, Swissy. Yeah, let's move this then. Euro Swissy. Cool. Oh, well, it's this one now. Huh, I messed that up. All right. So what's going on? Well, the month opened out of position. So as you guys know, you buy the 4-hour 21. That's straight out of the training course on FX Bootcamp. That's just how you buy an out of position trade. Target, when you buy an out of position trade, it tells you you're likely to hit your target early. And in that case, there very often sets up a counter trend trade. Can anyone concur? All of that information is in detail. Out of position trade, buy at the 4-hour 21. Your target is up here. In fact, you're likely to hit your target early. Therefore, you're basically anticipating a counter trend trade, and that would take you back to the CPP. Jim concurs. Thank you, Jimmy. The other Jimmy, he also says yes, yes, yes. So like, if you don't know this stuff, I don't know what else to do. I've already made those resources available to you. So now here's the interesting thing. Yeah, we're outside the weekly and everything is just a mess. You know, I would be predominantly more down than up, but on the short run, I'd have to be cognizant of the next level of support. And I'm thinking if it feels to me it's more like this. But I think it's going to be hard to get down there. I think what you're going to see is something like this. And then what? And then what? I don't know. I don't like counter trend trades. I know when they're likely to occur, but I don't necessarily like trading them. So for example, would some bulls still buy it here and drive it back up? Yeah, I could see that. But if that's breached, then we're going down here. So what does this make this, a 50-50? You know, and then what about this central pivot? That's where we're thinking up here. And I'm like, it gets all wishy-washy. Yeah, Raymond says he's never seen one open up so out of position. But it still did exactly what I said it would do. All right, so Chanel Powell says, I don't remember the specifics out of position, that's all. Then write all of that down, okay? And then come to the swing trading class on, oh, it's not a class, like we just meet as a group and I set up trades, but maybe ask a question about it, something like that. Yeah, and Wednesday, but this is a Tuesday hit, right? Or in this case, it's not a Tuesday versus Wednesday thing, really. It's early in the month versus middle of the month. All right. So is it early in the month yesterday and all that kind of stuff? Yeah, that kind of stuff. So I think the better way of doing it is just taking profit and getting out of the way. And then maybe reloading down in here if you see the proper price action. I mean, that's the better way to play it, I think, is just get out of the way. And if it comes down here and tries to head back up, I mean, it's not good because you got this lower than that. So really it sets up like a triple top. So, I mean, it really comes down to whether you're bullish or a bear. Bearish, you should have sold a long time ago. So now what? So now even then you need this. So I don't know. In many ways, it's over for now, I think. It did what it was supposed to do. I'm still thinking there's going to be more bulls than bears in the longer run. So this really feels like, Friday's bottom. So I think if I were trading this, I would probably have a general strategy of something like this. So maybe I end up buying it next week, right? Does that make sense? Yeah, Nicola and I talked about that yesterday. And in fact, I said 95. So I talked about the sort of the traits that will make you a better trader, so you're more likely to be in the 5%. Things like a sickening work ethic, a smart brain because you're doing your analysis. Not only you're doing the work, but you're doing good work. I think in anything, right, that you can think of, whether you want to be a ballerina, concert pianist, a salesperson, a Forex trader, even I don't know about a roofer. I don't know. But anyways, in almost everything I can think of, you need to be a hard worker and you need to do good work. Okay? Those are required in everything. Now, in specifically Forex, you need both those things, hard work, and the work you do is good work. But on top of that, you need assets under management. You need money to be a professional money manager. People ask me what I do. I say I buy and sell money. Okay? So you need money to buy and sell money. You just need it. So you either have money now because you had a good job, you have a good education, you have good savings, you have a retirement, all that kind of stuff. And you're like, you know what, I can allocate $100,000 to this, but I'm not going to trade real money for 2 or 3 years. I don't really need to live off income, so I'm going to grow it over time. But a lot of people don't have that. They come to Forex because they're poor. They don't have money. They wish they had money, and this is maybe an opportunity for them. And as I described, it is an amazing opportunity to make money, but you still need money to make money, all right? So what are you going to do if you don't have money? All you have is a sharp mind and a work ethic. What if you have everything you need but money? Then you take your smart mind and your work ethic and you work for 3 or 4 or 5 or 6 or 7 years building together a track record that's marketable. Now you have a product that you can market to somebody and say, look, if you give me your money, I'm likely to do something like this, like I've been doing for 5 or 6 years, even though the market's changed and we had this happen and that happened and this stock market rally and this stock market crash and this Brexit and this, all this stuff. Through all of that, here's the common stability that I offer. And somebody says, that sounds good, I will give you my money. Pretty simple stuff. So now you have your ridiculous, sickening work ethic, and the work you do is really, really good. And now you can show someone that you can do it consistently over long periods of time, over changing market conditions. You can quickly adjust. Low volatility, steady returns. And money will just fall out of the sky for you. But like I talked about 2 or 3 days ago when we had this conversation, most people are not willing to do the work or the effort. They look at it like 4 years to create a track record and then maybe I can make money. And then I said, well, I signed up to Harvard. And it's a 4-year program. It cost me a lot of money, a lot of time and effort, lots of sacrifices for me, and my family makes sacrifices for this to happen. And in 4 years, Harvard's not going to pay me a penny. Right? Harvard won't pay me a penny. So I spent 4 years of my life, and let's say $100,000. And what do I get at the end? Piece of paper. So now maybe it's marketable. Maybe I can go out to someone and say, you know what? I have a ridiculous, sickening work ethic and a sharp mind. How can I prove it? Well, here's my track record of success. And by the way, I went through Harvard. I have 2 degrees from Harvard. Harvard filters out all the idiots. Harvard filters out all the people without work ethic. Harvard filters out the dummies. So you can trust my track record of success, my natural good looks and charm, and my 2 degrees from Harvard. One in management of finance, and the other one in macroeconomics. I might actually know what I'm doing. And they're like, yeah, that makes a lot of sense. Yes, I'd like you to manage my money. I say, cool, right on. Good show. AMFX, you always need money. You're crazy if you think there's always enough. No, I'm comfortable. I'd like more. But the other thing is like, no, I like hunting. I actually think about it the other way. I'm an entrepreneur. I was an entrepreneur before I was in Forex. So it's just like, I like hunting. I like building. I like winning the game. I like the game. I like playing. I have very smart people that ask me for advice on a regular basis. And I like it. I don't know. I like what I do. What else can I say? I don't know anything about Elliott Wave Rio. It just doesn't fit my personality. But anyways, no, to AMFX, I'm not that rich where like I don't care about money. I'm not that rich. And I'm sure it happens somewhere, but I don't know. Look, don't get me wrong. I like money. I need money. I have plans for what I would do if I had more money, but money isn't like, yes and no. I mean, I don't know. It's not, it's important, but it's not the thing, right? Like, yeah, it's just, I don't know. It's just silly. I've never thought about it that way, but I wouldn't want to work hard all day for free. And more is fun, right? Like my friend just spent $1 million on a car. I don't have $1 million car. I don't have $1 million car. I don't. Do I want one? I don't think so. I don't even own a car. I have a golf cart. It's a really nice golf cart. So, do I have $1 million car? No. Would I buy one? No. I know people that buy them and they have tens of millions of dollars in cars. Is that a goal for me? No. Is that why I do what I do? No. But I love being a Forex trader. And I tell you, and if I didn't do these webinars, I'd get really bored really fast. The Canadian culture, maybe there's still some Canadian in me left up. So I don't know. It's interesting you bring it up. I'm going to have to think about it because it's an interesting question philosophically. I mean, I know what I like what I do, so I do it. But so how about this? Like, what if I made $100 million tomorrow? Okay, if I made $100 million tomorrow, Would I do my webinar? I think I would. Would I do it another 10 years? Maybe. Yeah. Yeah. So, I don't know. It's just, yeah, it's a funny thing. Like, real passion is golf. My dad golfs 3-4 times a week. I like golf. I wouldn't golf every day. Like right? Like I'm a young man. I'm an entrepreneur. Like when I was 25, I ran a company of 3,000 people, right? We were talking about this the other day. Like I'm an entrepreneur through and through. I probably would, with $100 million, I'd probably accelerate my plans for you guys. I would probably just just push open a hedge fund. I just do it and I'm like, let's just throw 20 million in cash over into that little business. And I'd pluck you guys out one at a time and give you some money. Just here's some money for you guys, and we would just do that. And then I have enough friends that we could put hundreds of millions into that little fund, but I would want to grow it. Let's say every trader gets 500,000 in cash or something. So I could slowly over time have 100 people in my fund, and we would have conferences and meetings, and we bring in experts and talk, for talks, and I mean we'd have a lot of fun and contests, and you get to meet the clients, and we go out on family days on the yacht, but say like I just don't see, like, why would you quit doing what you're doing because suddenly you have money? That would denote that you don't like what you do. So, but the problem is, I like what I do, right? Chris, for less than that, Chris, go through the see the download link below the video that gives you the chart templates that I use. It also makes you an offer you can't refuse in there. So you're not going to spend $2,000 at FX Bootcamp. Okay? Go through there. You're not going to spend $2,000. Okay? Put that money in your trading account. Golf terms. But like that would be more interesting to me. Having 100 people that I have loyalty and respect for, and then show me loyalty and respect, and I understand what they do and how they do it, and we work together as a community and as a team, making a fortune and having fun together. Isn't that what our short time on Earth is all about? Like, why would you just stop what you're doing? Then what would I do? Like, golf every day? That's just so silly, right? Or would I sit on a beach? I have an entrepreneur mind. I can't sit on a beach for a whole afternoon. Right? So how interesting. Interesting question. It's valid. Like, I'm not poo-pooing on the question. It's just I just don't even think that way. So never thought of it that way. But who knows? Who knows? Maybe we'll do that. I haven't found 25 people that can do what they say they're going to do and then do it for years. They might do it for weeks or days, weeks or months. But yeah, I'd love to build a team and just fund you guys and have you do what you do. But then there's always something that screws it all up, and it's really sad. I've seen lots of great traders do really good for 6 or 7 or 8 months, and then they just have a total psychological meltdown. They can't handle the money, or their girlfriend gets pregnant and their wife is all pissed off about that, and their marriage falls apart and they start drinking. And then that trader just goes away and I don't see them again. And, it's weird. So love what you do, guys. That's the message I give every day. Love what you do. But take what you do very, very seriously. Plan for everything. Measure everything. You know, that's the message I give you every day. So for what's his name that was poo-pooing me, I hope I don't come across like, and I don't think Trader's Way would want that either. Like, why would I whore myself out to get you to put an extra couple of grand into a trading account for Trader's Way? Like, nobody wants that. What a silly, ugly model that would be. Trader's Way wants you to succeed and trade with them for years and years and years and years. And I'm trying to teach you the lessons that will help you succeed for years and years and years. So if that makes us unique, then good. Cool. Well, I guess I'll see you guys tomorrow, huh? Thank you very much for being on my team and showing me loyalty and respect every day. Thank you very much. Please subscribe. Please like. Please download my chart templates. Please visit Trader's Way, open a demo account, download MT4, then install my templates that I just gave you for free, and then I will see you tomorrow and Friday for free. And for those that are signing up for paid courses at FX Bootcamp, if you download my templates, along the way I give you a coupon code that makes you an offer you can't refuse. So for the person that says they want to buy $2,000 worth of stuff at FX Bootcamp, I'm not going to let you pay $2,000. That's ridiculous. UK Kenny, are you coming to Hong Kong? I think so. Maybe, probably. So I don't know yet. Sorry, man. I don't know. My wife's asking the same thing. Are you going to Hong Kong? I'm like, maybe. So I don't know yet. Hopefully. Probably. Just might be delayed. I don't know. So take care, guys. Cheers. Tradersway.com. Information's pro.